Hi everyone, my name's Brent and welcome to Three Crowns Trading. Every episode we're going to look at different commodities and try to get some sort of feeling as to whether this particular commodity is a buy, sell or hold. So today we're looking at gold. So let's start by looking at the historic price of gold. As we probably know, in 1971 the US and the world went off the gold standard, and back in 1971 the average price of gold was around $40. And since then it's gone up a bit, but it hasn't gone up a great deal. 2001 though, we saw a big change and the price of gold has shot up a great deal since then. It's up over 600%. 2008 was another big year, or another big time for gold, because in 2008, when the GFC occurred, the government started printing a lot of money, the QE that we see today, which is even more massive today, but that started in a huge way in 2008, and countries like Japan have been doing that for decades. But a lot of these Western countries really only introduced that sort of policy, that modern monetary theory in 2008. And that obviously supported gold and it increased inflation. So we saw some really huge gains in gold since 2008 until now. Okay, so here are some future charts and some forecasts and some historic charts. So on the left here, we have a historic chart of gold going back to 2017. And as you can see, right now, we have a converging symmetrical triangle pattern occurring. And as this chart points out, two things can happen from here. The price of gold can shoot up or shoot down, and there's a sort of a 50-50% chance of either of those things occurring because this is a standard chart pattern. On the right side here, we see the future forecast price for gold is more to the downside. They're looking at about 1630 in a year. That's what's being forecast. It's 1753 right now at the time of making this video, so it's not a huge drop. So what we're going to do now, we're going to look at gold and just think about, is it a good time to get into gold? Is it a good time to purchase gold, sell gold, or hold gold? And remember, research tells us what to buy, and charts tell us when to buy. Okay, so what I've done, I've put some gold producers. These are well known around the world. I've put 6 different companies there. And let's just have a look at the prices of these companies today, the price of gold today, compared to the price of gold back to 2019, before we had COVID and before we actually had a lot of modern monetary theory practices and the Fed supporting the economy so much. So, first thing we're going to look at, we're looking at PE ratios of each of these companies. And a PE ratio of below 20, as you probably know, is good. Under 10 is fantastic. Often a company may have a high PE ratio because the earnings are forecast to increase in the future. So as those earnings increase, the PE ratio will become more reasonable. But all of these PE ratios right here are quite healthy. Debt to equity, so over here 26 for Newmont Corp. Basically for every $100 that Newmont Corp has, they owe $26 in debt. And Regis down the bottom, obviously $22 in debt for every $100 they possess as well. Dividend yields, obviously the higher the percentage, the better. So this is money you get usually twice a year, and that's a percentage of the money you actually have invested in this stock. The higher the dividend yield, the better. Here we have the higher share price that occurred in this particular company in 2019. So this isn't the average, this is the highest price. This was the average gold price in 2019 at the same sort of time. And this is the particular company's share price right now, and this is the gold price right now. So I thought it would be really relevant to compare these. So let's just have a look at Newmont. In 2019, the share price was $45. And the gold price was $1,500, and now it's the share price of Newmont Corporation is actually higher now than it was in 2019, and the gold price is higher. And you'd expect that with a higher gold price, you should see a higher share price, because like most commodity stocks, they really do track the actual commodity that they're producing, and gold really does more than most, I think. And so that's a reasonable sort of relationship between previous price and current price and gold price. But then let's look at some of these other companies. Barrick Gold, good PE, debt to equity is okay, dividends okay. The price now is lower though. The gold price is around 10-15% higher than it was 2 years ago. However, the share price is lower. Over here, Newcrest, same thing. The share price is even lower than Barrick Gold on percentage-wise, whereas the gold price is higher. Northern Star, gold price is a lot lower. It's nearly 30% lower than it was earlier on, whereas the gold price is higher. Anglo Gold, something similar, around 30% lower. Regis Resources, astonishingly lower. It has a low PE. And its debt to equity and other statistics are quite reasonable. So all of these factors here make me think, why aren't people buying gold? It's interesting because the shares are better value now than they were in 2019. And an obvious answer to that would be because the share price is forecast to trend down. But what if it doesn't trend down? What if it does actually trend down? It's still not as low as the share price was in 2019. So is it a good time to buy gold now, even if you think it may trend down in the near future? Well, there's other factors obviously to consider. So we need to do a lot of research and charting to decide whether gold is actually worth a buy right now. One thing that most of us may know about is Basel III. So if you don't know, Basel III was an organization that got together mainly after the GFC in 2008, because the GFC was a really dire financial situation and it was a debt crunch. Basically, there was too much debt in the world and a lot of banks and people were in trouble. We had a housing crisis because of that debt crunch. So what happened? Basel III formed and they made a lot of regulations and some government policies to try to reduce the risks of another debt crunch occurring in the future. And they did that with the banks, but what they did with gold, and this only started really recently, a lot of this started last year, what they did with gold, under these new rules, it says here, banks are required to hold physical gold or other liquid assets for an amount of at least 85% of the value of unallocated gold on their books. So unallocated gold is referred to as paper gold. So basically, banks hold a certain amount of gold, but after we went off the gold standard, the banks were selling gold that they didn't even have. And down here, it was saying that it got up to about 400 times. So if banks had 1 kilogram of gold, for example, they were selling up to 400 times that kilogram of gold, and they were holding the paper of that gold in the bank. So you weren't actually buying physical gold. You can, but a lot of people were buying the paper version of the gold, and banks were selling gold basically that they didn't have. And if there was ever a run on the gold, people wanting to get their gold out of these banks, out of these mints, then these places would be in dire straits because they don't actually have the gold to give to these people. It's like going to a bank and going to the ATM and there's not actually the cash in the bank that you're owed. And that was a really big worry for a lot of these financial institutions, and it became really apparent in the GFC. So they made these rules where you have to have at least 85% of the gold that you're selling, the paper gold, and you have to have 100% of the physical gold to make sure you qualify after these new regulations have come into place. And in Europe, a lot of these regulations are already in place. London is the biggest gold exchange in the world, and these regulations haven't even hit London yet. They're coming to be enforced in 2022, in January. So that should affect the price of gold as well. And what's going to happen though? That's the big question, isn't it? Is Basel III going to support the gold price? Because now banks will actually have to have that gold in their vaults. Or will people turn away from actually purchasing gold? That's something else we need to explore. So it's easy to find as much information online to support your decision to buy gold. Its price is going to go up. or to find information to support your theory that the price is going to go down. So here's something bullish on gold. This is a gold price prediction for 2021 and beyond, and most of these numbers are higher than the current price of gold. They all are actually higher than the current price of gold. So all of these organizations, these financial institutions, banks, they foresee gold as being higher at the end of this year and beyond. However, you can always, as I said, find other arguments to say the price of gold is going down. Historically, the price of gold has gone up, hasn't it? Since the gold standard, since these first days of gold being found. However, obviously nothing goes up in a straight line, so we need to try to time our purchase of any commodity, of any stock, at the right time, and that's what we're trying to figure out what to do now. Is it a good time to buy gold? So in summary, looking at all that information, where do you think the gold price is heading? And the gold price is going to be influenced obviously by inflation. As money becomes worth less, things get more expensive and everything goes up in value. You see it right now with housing, with cars, with everything really, with food, with gasoline, and gold should follow. So that's very bullish for gold, and that inflation obviously occurs because the governments right now are printing crazy amounts of money. So there's another bullish summary, a bullish support for gold. Basel III, that could be supportive for gold. I would think it would be, but we're going to have to wait and find out. And then we need to do a lot of other research. A lot of research is required to determine whether gold is actually going to be a good investment at its current level. That previous chart I showed you of those companies, I mean, the prices are so low right now. Would you jump in now? Would you wait for the prices to go lower? It's a tough decision. To help you come up with a solution or some sort of trading strategy, you would need to look at revenue, the revenue of those 6 companies I just showed you. Those charts, the statistics I showed you were pretty basic, but you don't know and you don't have enough information to support your decision to buy or sell any of those companies. So the further information and research homework you need to do, you need to check out the revenue of those companies. You need to check out their income, their cash flow, geopolitical risks, such as are they in a third world country that may have more risks. There may be a military coup. So many different things can happen. So you've got sovereign risk there. Dividends. I love dividends in the way that if the gold price doesn't shoot up straight away, I get a nice little dividend twice a year from my investment, and I'm happy to wait for the price to shoot up. And ideally, I'm after capital gain. The dividend for me is a bonus. I want capital gain, but both is really nice, isn't it? But there's no point in getting a 7% dividend when your stock is going down at 8%, because then obviously you're losing money. So you really want to try to get the bottom of that stock, ride it up, and get the dividend if you can. The particular stock's earnings, I would do more research into that previous chart I showed you of the 6 companies. I'd be looking at those companies' future earnings. I'd be looking at their gold reserves. And I would put all of this information to try to pick the best 1 or 2 companies there. And then I'd think about, will I jump in and will I make the investment right now? But right now, you see the price of gold has been ticking down for over 6, 7 months. 8 months, and obviously it's going to have to get to that point where it finds support and it's going to shoot up. So is it a time to buy gold now, or is it a time to wait? Other things that need considering if you're going to make a decision into investing in gold: the US dollar. If the dollar collapses, obviously gold is a safety hedge and people will rush to solid assets like gold and other commodities as well. Bond yields, when bond yields go up, the price of gold goes down. Interest rates, as they increase, gold prices go down because it's more expensive to borrow money, and stocks in general go down. And QE and interest rates, right now the Fed and most countries are not interested in raising rates because they know it's going to affect the housing market, and there's going to be a lot of kick-on repercussions from raising rates, and they feel it's just too quick and fast to do that now. However, the US has just mentioned QE, and the US basically is printing about $120 billion a month and pumping that into the markets, mainly buying bonds, and they're going to reduce that, I think, to around 90 billion, a month. But for me, it's sort of, you're still putting 90 billion in, like, Stocks should not be going down because QE is being reduced, because the money is still going in. It's just not going up at the same rate. But it's obviously the fear of QE leading to interest rates increases that has a negative effect on stocks and stock markets. So this is the big question, the risk-reward ratio. Is it right now a good time to find a particular gold company? And I would rather find a producer. I'm not really looking for gold companies that are just exploring. You want a good, solid producer that has a good track record and is increasing its reserves. And decide, is it a good time to go in now? Risk-reward ratio, and that's the big question, isn't it? Charts. I mentioned earlier, charts tell us when to buy. So what are the charts saying? We looked at some earlier. I would put some charts together of each of those individual companies and look at the candles in those charts. Are they above the EMA? Are they below the EMA? I would look at standard patterns like diverging wedges, head and shoulder patterns, just to get an idea of pricing. But obviously the gold price is really an important part of whether it's going to move a stock's price or not. So what's the best strategy? Buy, hold, wait, average down. I know what I'm doing. I'm interested in buying at the moment, and obviously this is not financial advice. We all make our own decisions, and I will average down as the price goes down, and I'm willing to wait because I am getting dividends, and I'm just happy having my money somewhere safe with the amount of inflation going on right now. It's a little bit scary in some ways, and I don't want to be in cash, but I don't want to be in the wrong areas either. And a lot of other commodities have really had their run. They seem to be peaking out. Gold seems to be bottoming, possibly, but even if it's not, a lot of those stocks just seem to be at bargain prices when you compare the price of gold previously to today and their stock price previously to today. So, what's the best strategy now? Buy, hold, wait, average down. What are you doing? Let me know your thoughts in the comment box below. And if you know any other gold companies that you'd like to share with everyone else, let them know in the comment box below. And please subscribe to this site. And in the next video, we'll just look at another commodity and we can have a talk about where we think that is in terms of whether it's worth buying or selling. Thanks for listening.